Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you 5 major stories from the world of business. It's Thursday, February 20th, 2025. This is Nelson John. Let's get started. In January 2025, foreign portfolio investors withdrew over 780 billion rupees from the Indian equities, marking a significant sell-off. This trend persisted into February, with outflows reaching 73.4 billion rupees by the 10th, as per National Securities Depository Limited NSDL data. Despite this broad retreat, FPIs increased their stake in select companies during the December 2024 quarter. Notably, FPIs raised their holdings in Greaves Cotton, a diversified engineering company, from 1% to 2.4%. This surge coincides with the company's announcement of an IPO for its electric mobility subsidiary, Greaves Electric Mobility. Similarly, Shaily Engineering, specializing in high-performance plastic components, saw FPI ownerships rise from 3.1% to 5.4%. The company's focus on proprietary drug delivery devices has positioned it favorably in the healthcare sector. Borosil Renewables, India's sole solar glass manufacturer, experienced an increase in FPI stakes from 4.2% to 5.4%. This uptick followed the imposition of anti-dumping duties on solar glass imports, benefiting domestic producers. Infrastructure firms like Kalpataru Projects International and KEC International also attracted higher FPI interest, with stakes raising to 12.4% and 15.2% respectively, driven by substantial order wins in the transmission and distribution sectors. In the chemical sector, Atul Limited saw FPI holdings increase to 11.2%, bolstered by strong quarterly performance. Meanwhile, Action Construction Company, a leading crane manufacturer, witnessed FPI stakes climb to 11.9%, reflecting confidence in its growth trajectory. These targeted investments suggest that despite overall market exits, FPIs are selectively increasing exposure to companies with robust growth prospects and strategic initiatives. In the December quarter, Bharti Airtel reported an average revenue per user (ARPU) of 245 rupees, surpassing Reliance Jio's 203 rupees. This 42 rupees gap, up from 38 rupees in the previous quarter, is attributed to Airtel's higher proportion of postpaid users and the migration of 2G users to 4G services. Despite Airtel's ARPU lead, Jio's larger subscriber base of approximately 460 million compared to Airtel's 360 million positions itself to gain more in absolute revenue from future tariff hikes. With India's mobile connections nearing saturation at 1.15 billion, ARPU growth remains crucial for revenue expansion. However, challenges such as increased home broadband penetration and regulatory directives for voice and SMS-only plans may impact ARPU growth. While Airtel's shares have risen nearly 50% over the past year, the recent 0.8% stake sale by the Mittal family, the company's promoters, could influence short-term investor sentiment. AkzoNobel N.V., Europe's leading paint manufacturer, is considering selling its consumer paint division in India, potentially valuing the sale between $1.5 to $1.7 billion. This move comes as part of a strategic review initiated last year. The company plans to retain its industrial coatings segment due to its complex partnerships and advanced technological requirements. Three major contenders are Pidilite Industries, JSW Paints, and Indigo Paints. They've advanced to the second round of bidding for the consumer paint business. Pidilite is reportedly preparing a solo bid, while JSW Paints and Indigo Paints are exploring collaborations with private equity firms such as Blackstone, TPG, Advent International, and Warburg Pincus. If AkzoNobel opts to sell both its consumer and industrial coatings division, the total valuation could reach up to $2.2 billion. The industrial coatings sector involves intricate intellectual property rights and long-term contracts, making it less straightforward to divest. The final decision on the sales structure and the assets included is still under deliberation. This potential sale could significantly reshape India's paint industry, currently dominated by players like Asian Paints, Berger Paints, and Kansai Nerolac. India's online gaming industry is navigating a complex regulatory landscape, with the central government considering a unified legal framework to replace the current patchwork of state-specific laws. This move aims to provide clarity and consistency for operators and players alike. A committee comprising officials from the Ministry of Home Affairs, legal experts, and industry stakeholders has been established to explore this initiative. Key discussions focus on differentiating game of skills from gambling activities, a distinction that has been a long-standing legal grey area. The government believes that a centralized law could not only streamline operations but also attract foreign investments and curb illegal offshore platforms. However, challenges persist, including pending goods and services tax notices amounting to 1.12 trillion rupees and the need to address concerns over money laundering and consumer protection. While the proposed framework offers hope for a more structured environment, its success will depend on effectively balancing regulation with the industry's growth potential. India's defense sector is experiencing a significant resurgence, driven by increased government spending, a focus on indigenization, and strategic global partnerships. In the Union Budget 2025, the defense allocation rose to 6.81 lakh crore rupees, marking a 9% increase from the previous year. Notably, 1.8 lakh crore rupees is earmarked for military modernization, emphasizing the procurement of advanced fighter jets, naval vessels, and artillery systems, reports Min's Abhinava Saha. This financial boost aligns with India's ambition to become a defense manufacturing hub. The Make in India initiative has propelled domestic production, with defense output reaching approximately 1.27 lakh crore rupees in FY 23-24. A 60% surge since FY 2019-20. Private sector involvement is also on the rise, with companies like BEL reporting robust growth due to increased orders and a strong order book. However, challenges persist. A significant portion of the defense budget is allocated to personnel costs, leaving limited funds for capital expenditure essentials for modernization. Analysts emphasize the need for accelerated procurement processes to ensure timely acquisitions of critical defense equipment. Strategic collaborations are also shaping the sector's future. India is in advanced discussion with global defense giants like General Electric, Rolls-Royce, and Safran to develop indigenous jet engines, aiming to reduce reliance on imports and enhance self-reliance. While India's defense sector is poised for growth with increased investments and a push for indigenization, addressing budgetary constraints and expediting procurement processes remain critical to sustaining this momentum. Well, that's all for today. Thank you for joining in.